Good morning, SVN, and all of our invited guests. We want to welcome you to SVN Live, our weekly property broadcast for February 5th, 2018. We hope everyone enjoyed the Super Bowl yesterday, regardless of the outcome. It was one of the great games for sure. We've had a lot of people already this morning talking about it. Well, as always, we have economic talking points that we try to share with you each week. These are items of interest, we hope, to both you and your clients. The REITs performed very well this last year, but obviously couldn't keep up with the stock market. The NAREITs indicated that their index was up about 9.27% in 2017, while the S&P 500 soared with 21.83% return. Obviously, the tax cuts helped a lot with that surge. Interestingly enough, though, commercial real estate still looks relatively cheap compared to stocks at the start of the year. That gives us a good value proposition for the income generation out of commercial real estate and the hedge that it offers against inflation. So we're pretty excited about the good news. It continues to be positive into 2018. Also, the other positive news is that the CMBS delinquency declined again fairly significantly at year-end December. Best reading in 15 months at 4.89%. If you are in that business, 5% delinquency is probably fairly normal. What's very interesting, though, and I know we had a lot of advisors kind of monitoring and tracking the wall of maturities that occurred with all the originations, the 10-year CMBS originations in 2006 and 2007. Effectively, those have now all passed and been absorbed through the market. Good news is that if you look at Real Capital Analytics, the values in almost every market across America are equal to or higher than 2007's peak. And so 2018 should be a great year for CMBS issuance to get them back into the marketplace. That's a big part of what we do, of course. All right, we've got a lot of closed deals to talk about this morning, and I mean a lot of them. And that's good news for all of our advisors. We want to reach out to Henry Hanna, SVN Miller Commercial down in Salisbury, Maryland. He closed this retail deal, sold to a local developer. And of course, Henry is one of those collaborators that makes sure the community is happy with what he's doing. That deal closed at $1.2 million. Henry, congratulations. David Benzing, Art Rulo, and David Laney closed this Wilcox, Arizona property. This was a combination property, great income producer, 50 RV spaces, and a self-storage business. Wilcox is the Apple capital of Arizona and is a wonderful retirement mecca as well. $1.25 million, almost an 8.5 cap. California buyer paid cash for it, as they will. Nice job, guys. And David Benzing and David Laney also closed this Phoenix opportunity. This was a land parcel at $1.8 million, $21 a foot. Significant price for that asset. Was under contract for 14 months, so it wasn't easy, but they're going to redevelop it into self-storage. We should do very well in that marketplace. All right, David Cook's got a couple of things on the closing slides this morning. He and Steve Fithian joined forces on this Wichita, Kansas property. This was a single tenant net leased investment, $1.48 million. And good news is the buyer was investment group that Steve put together and has been doing some syndication. So we're very pleased and proud of him for that. 8.4 cap, only $59 a foot. No wonder he syndicated it. Nice job, Steve. David Cook, he closed this deal in Fort Worth, Texas at $8,793,000 and change, $288 a foot. Just below an 8 cap. Outstanding opportunity, very attractive real estate, and of course a nice commission as well, which is well deserved for David. We want to congratulate you on that, David. Hey, Kurt Arthur and Tom Hendry showed up with a wonderful opportunity. I remember this one. This is in Corvallis, Oregon, closed for $1,501,000. This was on a ground lease with the city of Corvallis, which makes it very interesting. Very interesting in terms of sealed bid auction as well. This is what Kurt and Tom are really good at. The Oregon market is really happy to do it, and it's an outstanding opportunity. Great deal story, Kurt and Tom. Look forward to hearing about that more in New Mexico. Hey, Gabriel Silverstein, our council chair of institutional and capital markets, and Louis Delando closed this Irving, Texas deal at $4 million. He also provided the acquisition financing for this deal. It was 100% leased to Verizon. Doesn't get much better than that. And if you know anything about the Dallas marketplace, Las Colinas is about as nice as it gets. Congratulations to that team, and Gabriel, nice job. Chet Barber and Tia Shim just closed this opportunity in Farmington, Utah, $4,570,000. Sold 32 acres of a total 48-acre parcel, and actually sold it to the Utah Department of Transportation. Very nice. The remaining 16 acres will be used for self-storage and light industrial. All right, we've got a lot of properties to talk about this morning. As you know, 100% of the time, 50% of the commission is available to you when you close a transaction with us. We have nearly $500,000 worth of fee to share this morning. And we're going to bring up, first up, our SFR portfolio experts, Michael Finch and Jeff Klein. It was a pleasure to spend time with you down in Charlotte at Jumpstart. I learned so much more about the SFR world. And this one's a bite-sized deal for whoever wants to get involved.
Thank you, John. Hello, SVN. I'd like to say a quick hello to all of you that we met at Jumpstart as well last week. It really was a pleasure, and we look forward to working with you all moving forward in 2018. And a quick thanks again to the entire SVN IC team, who was great getting some face time with you, John, George, Sarah, Solomon, Donna, and the rest of the marketing and corporate team that helps out these calls every Monday morning, and all the behind the scenes work that you all do at these conferences around the country. It's a lot of work, and just want to let you know we appreciate it. And now Jeff Klein and myself, along with Will Holman, our broker of record out of SVN Holman Norden office in St. Peters, Missouri, are pleased to introduce today this bite-sized portfolio. As John mentioned, got 19 single-family investment homes for bulk sale in Kansas City, Missouri. These investment properties are well located throughout the greater south and southeastern portion of the Kansas City MSA. Current portfolio occupancy is at 100% with a gross yield of 13.2%. The current owner recently purchased these homes and leased them up. So we don't have a T12 here, but we have conservatively modeled this portfolio at a 7.5 cap using a 45% expense ratio, which even a small local investor in KC could pretty easily add some efficiencies to that and get those expenses down and have this humming closer to an 8 cap. Our pro forma leverage cash on cash indicates 15.91% return, and the year one leverage IRR is forecasted at a solid 33.43%. This is a great opportunity for any of your clients that have either a 1031 coming up or maybe scrambling today trying to figure out the best place to place their money. We're expecting to see a lot more activity in the KC market moving forward in the SFR and built-to-rent portfolio world. Kansas City is poised to see a 6.6% home value appreciation in 2018, according to the Federal Housing Finance Agency. Vacancy has been declining in KC since 2010, as population is continuing to grow and expected to hit 2.15 million residents this April. And another interesting fact that should make an investor feel comfortable buying an SFR portfolio here is that 35% of the entire Kansas City rental market prefers to rent single-family homes. So please bring your offers. Great opportunity here with multiple exit strategies, a low price per foot, and an attractive market with good yields and returns. Appreciate it, and look forward to working with you all. Thank you.
All right, Michael, thank you very much. Let's go down to the middle of the country, actually, in Ohio. Jack Turner and Christopher Solomon have an outstanding land parcel right on a major highway.
Good morning, everybody. Hope you enjoyed the Super Bowl. I know we did. We had this opportunity in Central Ohio, and Columbus MSA is the fastest growing MSA in the Midwest in terms of population, income, and GDP. And Grove City happens to be the fastest suburb growing in that area. It's on the south side of the metropolitan area. This parcel, 19.12 acres, fronts on I-71 adjacent to the interchange with State Route 665. And it's in an area that is growing very, very rapidly. The good news about this site, it's ready for somebody to go ahead and design and build a property on it. It has all public utilities available. It's already zoned light industrial and has 100% 15-year real estate tax abatement available. And if more land is needed than the 19 acres, there's an adjacent 22 acres for a total of 41 acres. So if you have somebody who would like to place an industrial property in the Central Ohio, this is an excellent location. And so look forward to working with everybody.
Okay, it looks like we lost John for a moment. John, are you on? Looks like you're muted.
Sorry.
There we go. There we go.
We've got background noise here in California, and tried to mute it out so you didn't hear the landscapers and the trash trucks. So Michael Hoffman and Kevin Jennings, they have something that we really like, a very beautiful property with a price reduction in North Carolina.
Hey, thanks, John. Man, I was afraid I was going to have to pinch hit for you there for a minute.
I appreciate it, buddy.
Good morning, SVN advisors and invited guests. As John said, on behalf of Kevin and myself, we'd like to present 421 South Church Street, which is a 8,392 square foot, two-story building located in the Central Business District of Hendersonville, North Carolina. This building is 100% leased through 2021. We have three tenants: Wells Fargo Advisors, Edward Jones, and a local CPA firm, so that the rent roll is really strong. The owners just reduced the price to $1.7 million, giving this a 6.4% cap. The building's been meticulously maintained with no deferred maintenance issues. It's a standalone building and shares common areas with a larger mixed-use development that is behind it. You can see a portion of that in the photograph. But it is a standalone office, retail, residential condos behind it. Again, the price is $1.7 million. This is a great investment opportunity for your investor clients looking to get into the Western North Carolina market. Thanks, John.
All right, sir. Thank you very much, and I appreciate all you do. Let's go to New Mexico. Tim House has an opportunity for you this morning, priced at $2 million, and he's going to tell you about it.
Thank you, John. Good morning, SVN. We are proud to present this RV park and redevelopment opportunity in downtown Clovis, New Mexico. Clovis is a part of the Clovis-Portales MSA, 55,000 people in eastern New Mexico, just across the Texas border from Lubbock. It's a hometown to Buddy Holly. It is the rail hub. It is a major rail hub for Burlington Northern, and it is home to the Southwest Cheese Company, which a little-known fact is they're the largest cheddar cheese producer in North America. Clovis is also home to the Cannon Air Force Base, which is home of the 27th Special Operations Wing. They plan and execute specialized and contingency operations, special operations. Their aircraft are primarily AC-130 gunships, Predator and Reaper drones, and the Osprey. According to the Chamber of Commerce, Clovis Chamber of Commerce, last year, Cannon Air Force Base contributed $666 million and change to the local economy. That being said, I would like you to take a look at our slide, which shows the location of our subject property, 8.71 acres. it is in the middle of everything that's happening in Clovis and Clovis retail. It's priced at basically $5.25 a foot for dirt price. There are 64 RV spaces, very large RV spaces with room for expansion. When the owner first contacted me, he said he wanted to see about doing this. He had a redevelopment opportunity. He was tired of operating this, and it would be a great place for some apartments or an office complex. And so when we got our year-end income statements, he was a little slow getting those, and we got our year-end income statements. Very surprised to see over $318,000 in income and an NOI based on the owner's numbers of $186,000. So I believe this would be a great long-term hold. The part of the management could stay for a while. It could be used as a long-term hold for cash flow or for redevelopment, and we would certainly look forward to discussing it with you.
All right, Tim, thank you. That's why people have RV parks and mobile home parks, the best land bank in America. I've been to Clovis, actually, have a nephew that's a load master on one of those gunships. So nice job, Tim, and a great opportunity for somebody. I get asked every week if I have an RV park or a mobile home park available. Good job. Let's go to Joel Miller, Neil Johnson, and John Gwill. They have a price reduction on one of the nicest retail centers you're going to see in Wheaton, Illinois, a great community.
Good morning, John. This is Joel Miller out in the Geneva office. This is a represent of an asset we originally presented in November. We just reduced the price to $8,950,000, which puts us up just over an 8 cap on our current in-place income. Shops of Wheaton is a retail and professional center in Wheaton, Illinois, about 20 miles west of Chicago. The center is ideal for investors seeking a low-risk investment with stable returns and strong opportunity for future growth. This property is located in a thriving suburban Chicago market with very low retail vacancy, strong population density, including more than 280,000 residents within 5 miles. It's surrounded by high-quality national retailers, including 3 full-service grocers, Whole Foods among them. The stability of this asset is derived from its complementary mix of internet-resistant retail and entertainment, service, and professional tenants. They all support each other really well. It's further enhanced by our low in-place rental rates. We're averaging only $9 a square foot net in a market that typically supports $20 to $40 a square foot. Over the past 18 months, John Gwill and I have worked on filling vacancies and re-tenanting spaces after the center was bought out of receivership. To date, we've leased 25,000 square feet to 8 tenants. We've brought the center to 98% occupancy, and all of our new leases coming in, we're executing those deals at about 50% above the previous rental rates. We're seeing really strong upward trends on our rental rates in the center. We expect that to continue, and we've done all that with very modest TI investment from the landlord. The current owners, who are the sellers, they have made substantial investments in this asset over the course of their holding period, a little over 2 years now. We've got a brand new roof on this building, and we've made an additional $600,000 of capital improvements. There's not much to do here in terms of physical improvements. It's in excellent condition. In summary, this is a great investment for somebody who's looking to get a above average return, but not take on the risk that they would see in some other assets. We've got high occupancy rates, attractive cap rate over 8%. We've got strong annual increases structured in our existing rents. Those average 2.65% per year. It's a robust retail market. There's very little vacancy, and all the vacancies at least double our asking rent in this center. Future upside is a huge opportunity here. We expect over the next few years, as some of the remaining legacy tenants roll over and run out of option periods, we'll be able to continue growing our income in the center. We've also got a full 2% co-op broker fee. It puts us at $179,000 at our asking price. Bringing some offers on this one. We do hope to get this closed by the end of the quarter. Thank you.
All right, Joel, thank you very much. Only 113 a foot. And remember, Wheaton College is right there as well, one of the best in America. Talking about best in America, West Hollywood is one of those places that doesn't exist anywhere else in America. And Garen Petrosian and Alan Afshar have an outstanding $12.5 million opportunity for you. That's one in a lifetime. Garen, are you there? Just hit.
Oh, yes, I thought I lost you. Thanks, John. Absolutely. Thank you so much. And good morning, John. Good morning, SVN. So Alan and I have listed this prime commercial building in prime West Hollywood location, and it's suited for investment and development opportunity. And now it's a mixed property where you have retail on the first floor and offices with creative lofts on the second floor and third floor. It's priced at $12.5 million, with which is a $769.85 price per square foot below market for the neighborhood. It's a 16,237 square foot of a building with land of 15,943 square foot. It was built in 1956, and it's 6 parking in a gated parking lot, or cozy courtyard, actually. There are also additional incomes from the billboards and the signage. And the signage is basically, as you can see from the slide, you have a dispensary, and they do have multiple signs. And it's a pre-forma cap rate of 6.4%. Now, this asset is strategically located south of Santa Monica Boulevard. It's on La Cienega Boulevard, great building visibility, and signage along La Cienega Boulevard. The traffic count on North La Cienega is about 35,501, and on Santa Monica Boulevard is about 37,375. It's a unique upside potential for a savvy investor or developer. The asset is located in the most desirable West Hollywood area, which is minutes from the Sunset Strip. So you have the Mondrian Hotel, Laugh Factory, Whiskey A Go Go, Pacific Design Center, CBS Television City, Roxy Theater, along with the boutiques and restaurants. It has close proximity to the Grove, which was originally the farmers market, 575,000 square foot of shopping mall. You also had the close proximity to Beverly Center, another 883,000 square foot of mall, and to the Cedars-Sinai Medical Center, which is a nonprofit 958-bed hospital and academic health center that employs a staff of over 2,000 physicians and about 10,000 employees. So if you have any questions or have someone that may be interested to this type of project, you can call me or Alan, and I would definitely like to work with you. Thank you so much.
All right, thank you for that great opportunity. As you know, we have events and webinars at SVN for all of us, and we look forward to the one later today. That'll be the hospitality call, 11 on the West Coast, 2 on the East Coast. Sanjay Mundra will be hosting that. Got to see him also in Charlotte. Really enjoyed that. And then Thursday, please join our council chair, Ryan Embry, with our retail council call, 10 on the West Coast, 1 on the East Coast. And you'll always find some great information on all of our calls that our council chairs hold for us. All right, as you know, unless you've been under a rock somewhere, we're going to go to the land of enchantment and see Tim House and all the team in New Mexico and everybody else in the country for the 2018 SVN Annual Conference. That's going to be March 7th to the 9th, 2018, and we are really looking forward to that. We have the entire resort for SVN, so you will be surrounded by a wonderful group of collaborative people and having a good time. So please join us. It's not too late. Get registered, get involved, And as you know, those people that are involved are the ones that end up in the SVN top 100 for sure. All right, we want to thank you again for joining us this morning. As you know, everything we do at SVN is at www.svn.com. And 100% of the time, 50% of the commission is available to you when you close a transaction with us. And we really look forward to you doing just that. Good day.